Richard, thank you so much for joining us here at SuperInvestor. It's certainly a very challenging environment. What is it that you're looking at the moment in terms of companies, and what are you most interested in? What's your strategy in this challenging world we're living in?
Yeah, so in some ways the market kind of is coming in our direction. We're value-oriented investors. We were founded in 2015, so even through the height of the boom, we continued to pursue a value-oriented strategy. And our focus is US companies with at least 20 million of revenue that have not raised prior venture capital or private equity. And that really is a source of our differentiation. We're looking for a diamond in the rough. We're looking for businesses that have not previously worked with a financier. Therefore there are things that we can do to help them to grow, to improve their operations. And we can also have an entry multiple that is attractive. So we've consistently pursued a value-oriented strategy. And now in this world, the opportunities are abundant.
How are those growth buyouts different to conventional ones?
Yeah, and so we differentiate ourselves from conventional buyouts by describing ourselves as growth buyouts. And our approach is to take a buy-in approach to companies. So instead of asking the management team and the business owner to leave, which is typical in a conventional buyout scenario, we look for partners in management and the founders of the business who want to work with us. And we love situations where it's a management team that feels a significant conviction about the growth opportunities ahead rather than what's behind, and is maybe looking for a little bit of liquidity, but is not looking to put a lot of cash in their pockets. And so that's the buyout part, which starts with a buy-in. And then growth. We're always looking for growth. We're not simply rolling up companies and trying to get to scale. We're looking for organic growth and then sensible tuck-in acquisitions that really enhance strategic value, but also margins.
And it sounds like, from what you're saying there, that you do get very involved with your portfolio companies too.
Yeah, we're very involved in our portfolio companies almost on a weekly basis. So we have certainly start with having board seats. But operationally, we get involved on the sales and marketing front. We look for situations where we have access to customers that can be helpful, that can significantly scale the business to really lift the visibility of the business. And then we have a portfolio operations and finance team that typically drops into these businesses for the first 100 days and upgrades. I mean, the kind of companies we're looking at often don't have audited financials. They often don't have a built-out finance team, and so we can act as that finance team initially, and then we bring in professionals to run those operations properly. But we love entrepreneurs who want a partner, and we're a heavily engaged partner.
And really add value in that way,
yeah.
Absolutely. And how is the current environment perhaps sort of impacting your portfolio choices perhaps and your investment pipeline looking forward?
Yeah, so our portfolio is entirely focused on business to business. So we don't invest in consumer-oriented businesses, and that's really where I think the visibility is very poor and the correction has been more pronounced. In the more enterprise world, you have long-term contracts, and then you have people planning out beyond 12 to 24 months. And our expectation is, and I think most economists are expecting, a shallow and relatively short recession. That is, either we're in it or it's first half of 2023. And that's really those are good conditions for us because it's a loosening of the labor market. And the biggest challenge for our portfolio has been hiring. So we have backlog and revenues, but the challenge is actually executing on delivering the business. So the ability to hire is improved, we think, already, and will continue to improve in the coming months. And then because we're in these business-to-business kind of industries, people are continuing to buy and plan through 24 and 25, kind of through the recession, which I think speaks to expectations are still very strong for continued growth in the US in the long term.
So the choices you've made in your portfolio companies, they've got inbuilt resilience, if you like, that you see.
That's right, yeah. So the existing portfolio has resilience. We're investors in companies that, it ranges from kitchen appliances to hospitals to a lumber manufacturing company, a legal tech company. So very idiosyncratic, but the common theme in all of them is very long-term, durable businesses that don't have any sort of tie to a fad or aren't fashionable. And we look for similar businesses. So we're looking at companies in industries like recycling. We're looking at businesses that have long-term opportunities. Right now, we've recently invested in a business that works on home equity lines that have grown significantly because of the retrenchment of the mortgage market.
There are 1,300 members of your profession here in Amsterdam. SuperInvestor is the biggest global gathering of LPs and GPs focused on that relationship. What would you hope that somebody would take away from a chat with you this week as a key message?
Yeah, I think the key message for us is the next phase in private equity is alpha generation. We've been in a beta market where you could basically buy a company, multiples would grow, the economy was growing, and sell at a higher multiple. And so people are entering at nosebleed valuations. Now I think we're in a market for the value investor, and our growth buyout model is very much tuned to looking for idiosyncratic opportunities. And after a world where everybody made money, where everything was correlated, I think now really picking the right manager with the right strategy for the time is important. And I think our outperformance, the ability for different managers to outperform, is enhanced in this market. And we hope that we will stand out from the crowd.
The expertise will make you shine, if you like.
That's right, yeah.
Richard, thank you so much for joining me. Great to talk to you.
Okay, thank you.